And we're trying to figure out exactly what happened because you've got all the answers yesterday. Because yesterday, the worst day on Wall Street in like 7, 8 years, something like that.
It was the worst day since right after the September 11th terrorist attacks, and it was driven by a couple of things. Lehman Brothers, who was looking for a buyer, didn't find a buyer over the weekend, so they declared bankruptcy. Merrill Lynch agreed to be acquired by Bank of America, and so we were down over 4% on the major indexes, and that's continued throughout the Asian markets last night, and it appears to be going on in Europe right now as well.
So you hear about these banks going out of business, and you know, an average Joe like me thinks, are my accounts safe?
Well, that's the question that people waking up this morning probably have. So let's look at that. And in terms of bank deposits, you are insured by the FDIC up to $100,000 per depositor per insured institution. And that's important to note, the way I said that, per depositor per insured institution. You'll hear a lot that it's $100,000 per account, and that's not the case. You add those accounts up, and that's your limit of $100,000. Now, it can be more than that in the case of a joint account, perhaps some trusts and IRA accounts, but if you're anywhere near that level, you probably want to just double check your insurance limits.
Good idea. Well, you hear about these firms, especially in light of Lehman Brothers declaring bankruptcy. What about these insurance? I've heard the name AIG tossed around a little bit.
AIG is the world's largest insurer, and it's under some pressure today, and it's the company that people will be watching over the next several days. If we go back to the question of, is my money safe in brokerage accounts in light of Lehman, in light of the Merrill takeover, here it's important to note that the brokerage firm is simply the custodian of your assets. If you buy a stock position or a mutual fund or a bond, you own that position directly. You know, in the case of a bank, when you deposit money, they're going to lend that money out, and you know that.
Right.
That's why you get that insurance. But in a brokerage house, you own that position. So if the broker does go out of business, the position is still yours. Now, the position may lose value or gain value, but you still own it, and it's important to note that.
So much information out there. Is there a best source? Should you deal with your broker if you're still dealing with them? Go on the internet? I mean, you get it from everywhere.
Yeah, I mean, the best place to start probably is just your financial institution. You know, if that's your bank where you have accounts, if you're with a brokerage firm and you're concerned about your coverage, ask the question directly and be very direct and make sure you get an answer that you're comfortable with. There's also great websites. You can go to FDIC.gov and you can find out about those insurance limits. In terms of investment houses, you can go to SIPC.org and you can find out about securities protection.
All right, appreciate that. I know a lot is being thrown at people. Darren Hayes, our financial expert.